Okay, Brian Lauer, how are you?
I'm good. How are you?
Good. Let's see. I think last time I saw you, it was in uh, December of last year at the CUSO, the CU conference's CUSO conference.
Yep. Yep. Down in Florida, right?
Yes, sir.
Yep.
So, um, actually, I had purchased your book, before, attending that conference. Um, I didn't even think about it at the time. I thought about it afterwards. It's like, I should have brought the book with me so I could have had you autograph it. But thank you for giving us a few minutes of your time. I don't want to take up a lot of your time, but one of the things that literally I just had a conversation with the CEO of a CUSO just a couple of weeks ago, who singing your praises. Your firm took very good care of him, and so I've been talking with a consultant that's done some strategic planning for us. We've been discussing some type of CUSO opportunities, so looking forward to having your firm take care of us as well.
Yeah, hopefully we can help you out for sure.
So I just had, a handful of questions for you as I collaborate. A couple of years ago, I started collaborating with credit union CEOs, primarily just for us to go over a lot of the things, good, bad, and indifferent, dealing within the CEO realm of credit unions. And as I was trying to build up that, it really didn't take a lot of traction because I was kind of niching down into the CEO space. So I kind of opened it up and this past year rebranded it under Credit Unions Forum and have been talking with all different types of people within credit unions, managers, senior leaders, executives, and talking to people outside of credit unions, different companies that help credit unions in different ways. And that's how I came across some of the CUSOs. And, the first question I got for you, Brian, is I've seen different things that you've mentioned where real ways that credit unions can effectively invest in innovation and fintechs. Um, Now, for CEOs that are still on the sidelines, what are they risking by not actively engaging in a CUSO strategy today?
Well, I think CUSOs are one tool in the toolbox for credit unions to use to better serve their members and increase their member growth and their ROA. And so by not using CUSOs or not at least strategically thinking about CUSOs, I think credit unions are missing out on a mechanism that's in place for them to better survive and thrive in the current state of the financial services landscape. And when we talk about innovation, credit unions are more and more implementing and using technological or technologies within their ecosystem. And I think that CUSOs give credit unions an opportunity or the CUSO powers give credit unions an opportunity to invest in the technologies that they're using. It gives them potentially an important seat at the table for their delivery channels, as with giving them an opportunity to be able to guide a technology to make sure that it's meeting the needs of the credit union. So I think that's what you're really missing out on if you're not getting involved or at least strategically thinking about CUSOs as a solution or tool.
And that's kind of how, like I said, I bought your book a couple of years ago. One of the things from a CEO perspective, financials is one of the areas I was looking at. So looking for ways to either, increase revenue or decrease expenses. And I know there's a lot of different ways that CUSOs, can help credit unions do that. Now, Historically, I think a lot of CUSOs originally were started with, credit unions looking to kind of share in expenses of some type of common type of thing. Based on your experience helping, hundreds of credit unions out there, um, what would you say are the greatest opportunities for CUSOs to drive non-interest income and new revenue streams today?
So on the revenue side, I mean, I think credit unions are trusted partners in their credit union members' financial lives, right? And and for good reason. So I think that the use of CUSOs to better to be a part of those the members' financial lives in a more robust manner is really important, right? So you talk about, where are your members going for guidance on property and casualty insurance? Where are your members going for guidance on, investment advisory services? Where are your members going, for real estate brokerage services? All these kinds of things that are sort of forward-facing, member service-facing type of products and services. That's a really great way for credit unions to use CUSOs to generate income for the credit union. For, first and foremost, be that trusted advisor and and provide, great member service for your members. But then also all of those services that you're providing would generate non-interest income as well. Whether you're sharing in the commissions or the premiums in an insurance situation where you're providing an auto loan and you're able to provide the auto insurance as well, or some of these other services where you're part of that financial process. Maybe you're providing the mortgage at the credit union traditionally, but maybe you can also be part of the real estate sale and purchase environment through real estate brokerage services, right? So these are just all these sorts of interesting areas that credit unions can use CUSOs to try and generate non-interest income. And the way I like to think about it sort of much more broadly is that CUSOs, when we talk about them in this fashion, are a way for credit unions to think outside the box that is their traditional credit union, financial institution services, and think about things that your members need, and think about how the credit union may be the right place for them to get those financial services, even if they're not traditionally done at the credit union. So we'll have a lot of folks call us and say, hey, I have this great idea about this, that, or the other, in the financial services space. Is it something I can do? And, we might say, well, maybe the credit union can't do it itself, but you could form a CUSO to do that, right? And then generate and get that non-interest income. So that's really where I see CUSOs being an important part of the credit union lifespan.
Now, Brian, you've worked with countless credit unions on, forming and structuring CUSOs. What are the most common legal or governance mistakes you see that end up limiting their effectiveness or even creating risk?
So I think the first thing to think about is everybody says, I want to form a CUSO, and they don't really know what that means. Ultimately, a CUSO is just a for-profit company that a credit union would be a part owner of, or a 100% owner of. So when we think about the question like you just asked around what documents you need and how to prevent risk, really what we're thinking about is in the corporate environment, whether that be an LLC or a C corp as the most common corporate forms. What documents do you need to make your LLC, or to have, what documents are necessary for an LLC to run just in general? Those are the documents you need, like an operating agreement. Or in a corporation environment, you're going to need your articles, shareholder agreements, bylaws, those kinds of things. So the documentation itself is not in and of itself unique. The area that CUSOs is the area where the legal form of CUSOs is unique is around what regulatory requirements there are. And so the spots where credit unions will get into trouble is maybe they form a CUSO, but they're running it out of the credit union without not maintaining it as a separate entity. That can be a legal pitfall for credit unions when forming a CUSO. So, we will often have credit unions that form, like I mentioned, property and casualty earlier. Maybe they start an insurance agency that's 100% owned by the credit union. But if you're not maintaining a separate entity for that CUSO, that property and casualty agency, you're going to get into issues with your regulator because the regulators require that you have separate corporate form, that corporate veil, if you've heard that before, where you're operating each company as its own entity. And so that's really a big area where people get into pitfalls. The other area, the regulations that, again, it's not a legal document, but something that needs to be thought about is permissible services. So you really can only, and CUSOs, credit unions can only invest in companies that are providing permissible services, which are generally services around the routine operations of credit unions, whether that be member facing or back office. And so you want to make sure that you're fully vetting the services that you're providing through a CUSO to make sure that they are permissible under the regulations. And then finally, you need to primarily serve credit unions or credit union members with a CUSO. And so you want to make sure that maybe you're investing in a going concern, a company that's already out there. You want to make sure that that company's primarily serving credit unions and credit union members, to make sure you're in compliance with the regulations.
Now, so credit unions are kind of limited in what they can offer their members, but CUSOs, I guess, broaden up the spectrum of services that can be offered to the members then at that point.
Yeah, that's right. So there are, like, property casualty. I've used that as an example right today quite a bit, but a credit union can certainly have a referral arrangement with an insurance agency where they refer their members to a mom and pop down the street or something similar, to get auto insurance or homeowners insurance. But if they want to own the book of business, so meaning that they have a financial stake or ownership interest in the insurance book of business, they need to do that through a CUSO. It's not a power that credit unions have on their own. So they form a CUSO in order to be that agency to hold that book of business. That's an example.
Gotcha. Now, there's always tension between innovation and regulation. Given that CUSOs operate in a unique regulatory space, not directly regulated, but still scrutinized, how can CEOs lean into innovation through a CUSO without creating unnecessary regulatory exposure?
Yeah, so I think the key thing, we talked a little bit about the regulations, like permissible services primarily serving credit unions or credit union members. I think the only other thing we didn't touch on is that you need to have that, or we touched on the independence of the company, but that the company needs to have books and records and everything set up and in place in order to maintain that company as a separate entity. Those are really the regulatory hurdles. That said, innovation and regulation are at odds at times, like you said, and I think that's often more in the box of safety and soundness. Is that CUSO and what that CUSO is trying to accomplish, from on the innovation side? Is it creating additional risk for the credit union operationally, say, as the credit union's using the services of that CUSO? And so you want to make sure that you're fully thinking through the operational risks associated with using a CUSO's services, just like any vendor, really, vendor services. That's probably where the area of risk arises.
Now, I'm referring back to your book again. So in your book, you talk about bringing together credit unions and entrepreneurs. How should CEOs be thinking differently about partnering with fintechs or non-traditional players through the CUSO model?
Yeah, so the biggest thing that comes up in that arena is credit unions, for the most part, are very, very focused, almost solely focused on providing good service for their members, creating, financial services, whether it's through partnerships or creating them in-house, to better serve their members and their financial needs. And entrepreneur isn't necessarily diametrically opposed to that concept, right? They want to provide a good product or good service as well, but they will be much more focused on profits and creating, growth in users and clients, and growing the business in a traditional for-profit manner. And so, really, what credit unions need to think about is, are we all rowing in the same direction with our, if we get into a partnership with a particular fintech or something of the sort, making sure that you're not your focus on service is not going to get away in the fintech's focus on growth and profit. Those are probably the areas where there's the most pitfalls in entering into that kind of a relationship.
You know, I hear a little bit, with the CEO side of things in credit unions. Some CEOs are open to um, looking at different merger situations with their organizations for various reasons. And then there's some that are, almost, you know, against merger types of situations with their credit unions. And I've talked to both. And on one side, actually, instead of mergers, there's actually been some credit unions that have came together through CUSO shared services types of arrangements. So they've been able to save money, have people on their staff that they might not have been able to because they were smaller credit unions that might not have been able to afford a certain type of position. And so I guess CUSOs have helped credit unions in a lot of different ways, not just, you know, finding ways to increase revenue or decrease expenses, but some have used it as an alternative to, merger considerations. But then there's also been credit unions that have merged because of their CUSO, I guess, relationship there. But with with you having a front row seat in the evolution of CUSOs, looking ahead, do you see a future where CUSOs become the primary operating model for scale, innovation, or even consolidation within the credit union movement?
So I don't know that CUSOs will be the primary driver of consolidation in the industry. I do think that it is an opportunity to gain scale, absolutely an opportunity to gain scale and gain access to services that they wouldn't otherwise be able to provide themselves. The especially smaller mid-sized credit unions, may not have the capital and budget to be able to spin up what is expected of a full-fledged financial institution, one providing all sorts of products and services as opposed to just, one or two. And I think CUSOs are an opportunity to collaborate with other credit unions of similar size in order to find a way to jointly fund services, jointly fund, products so that credit unions can get access to those. There's two issues really going on there. One is the expense, as you've mentioned, but also its capacity. There are some products and services, whether you're going to spin them up in-house or even contract for them from a vendor, that are just too expensive, and you don't really have that much of a need for them to begin with, right? So you have your scale, you have your expense issue because you don't have the capacity to be able to fill out or justify that expense. And I think collaborating in CUSOs is a great opportunity to be able to say, all right, what if we have 10 credits or 5 credits, whatever it is, and maybe together collectively we'll use that contract and can justify that expense, but not each of us individually. So it is really a good opportunity uh, to collaborate to get that access to it and to have the capacity to be able to use those services. And I think when you talk about mergers too, I mean, I think it's really important to try and use collaboration and CUSOs as a solution to these kinds of problems instead of just thinking about mergers. Now, I'm not saying that all mergers are bad. There are certainly instances where they make a lot of sense, especially with a lot of overlap, and you can get, more scale as double the size rather than individually. And there's certainly instances too where there's a smaller credit union within the bigger credit unions market that just makes a lot more sense that their members are going to be better served by the larger institution. But I do think that CUSOs and collaboration are a great way to make sure that we aren't losing all of these smaller to mid-sized credit unions that are serving an important community or are an important resource to an important community. We have a lot of financial deserts throughout the country, whether they be in the inner city or in very rural environments. And I think credit unions traditionally have served those needs or have been the primary service provider for those areas. And as mergers happen, we start to see more financial deserts and more communities not being served by an institution that knows and understands them.
One last question on our conversation. For any of the CEOs that might tune in and hear some of your information, if you were a CEO, if you were sitting in the credit union space, say of $100 million to $500 million credit union today, what's the first type of CUSO move you think you would make in the next 12 months and why?
That's interesting. I don't think I've ever thought about that, Greg, in that sort of fine detail. But I think, I'm going to answer a little bit more vaguely, but you're sitting in as that CEO seat, you understand your membership, or if you don't, you should, right? You should understand who your members are and what your members need. You can analyze to your core data and the data that you have. I think data analytics is really important to understanding what it is your membership and potential membership is looking for. And then I think you can use CUSOs as a tool to try and solve those problems. I think CUSOs very broadly and strategically are a problem solving tool in the credit union's toolbox. So the idea is you have a problem, you have a need, and let's think about a way in which a CUSO can help solve that need. I think one of the other things we always talk about is that there are absolutely going to be low-hanging fruit items. When you analyze your credit union and the things that a simple product or service that you don't have today that you feel would be important to your members, you can do that and look for a CUSO to provide that. So I think finding that low-hanging fruit is a really good opportunity. The other thing I would say is look at what your credit union does well. There'll be things that you feel like you are best in breed at providing those services and or products to your members today. And a CUSO is also an opportunity to spin that off and serve other credit unions with those same products or services using your area of excellence to help credit unions provide excellent service in that particular area, but also generate some additional income for your credit union and using that, additional potential capacity that you have at the credit union. So those are the kinds of things that I think I would immediately look at.
Okay. Just kind of following up with what you just shared. So, as I've looked into different opportunities within the CUSO realm, the two primary things would be to A, either increase revenue or B, find ways to decrease expenses. We actually, this past last year, did invest into CUSO with our core processor. So I can actually say that we are part of the CUSO movement. On
Very
a
good.
complete different sidebar conversation, I'm kind of curious how, and now we're going way off the trail here, but just recently I had done a little project with my daughter Maria, and she had put together a book. Her and I worked on something together called Passion, Profits, and Purpose, and it was kind of a way for people to look for things that they're passionate about, find ways to make money, and live their purpose is kind of the crux of the book. But it was a self-published book. So I'm kind of curious, just real quick, and I know it's got nothing to do with CUSOs, but since you wrote the book CUSOs, I was kind of curious how what was just real quick some of the things you went through when you were putting your book together.
I mean, it really was a consolidation of work that I had done over many years in the business. Just putting it all in one place was really the biggest part of that, right? I've done written articles. My former partner, Guy Messick, wrote a lot of articles over the years. We've done lots of training sessions, like at the CU conferences, and with the CUSO, the Trade Association for CUSOs. We've done a lot of presentations. So I was really just putting that all together in one place in many ways, right? So just so people will have it consolidated in one spot.
Gotcha.
And then really it's ultimately essentially self-published as well, really, through Amazon. So
Okay.
yeah,
Oh, I hadn't really researched it to find that out because that's what we did too on Amazon. But
yeah, yeah.
so just finishing up, if anybody is wanting to, I guess, look more into the CUSO realm, how would they be able to find you? What's your website, contact information?
Sure. So the best way to find us would be our website, which is www.cusolaw.com. Pretty easy to remember. CUSOLAW.com. So yeah, if you come to our website, you've got our contact information in there, lots of resources and information there as well. So yeah, feel free to find us there.
Alrighty, well, thank you for joining us and sharing some of your insights on CUSOs today, Brian.
Absolutely. Happy to do it.
Thanks. Have a good day.
You too.